Hi, thanks for watching today. This is Tom Huser with the Huser team at Realty One Group. And I just want to go through a market update of what's happening in the greater Las Vegas real estate market through July of 2019. We'll go through some year-to-date statistics. So, of course, all this information will be through June, the first 6 months of the year. So let's get started. First of all, let's kind of look at big picture increase in home values. So this is kind of, interesting to see here that Nevada is way below everybody else. So this time frame is about 13 years from 2005 to 2018. For those of you that either watched the news or lived here in Las Vegas, we were the epicenter of the foreclosure crisis. So even though prices have moved up so much since 2012, if you really look at this long 13-year snapshot and the increase or the inflation that we've had in home values, it's nothing like all the other states. So this is why analysts are confident that Nevada is not in a housing bubble because we just haven't moved up like all these others. Okay, so let's get into some of the data here. This is right from the Greater Las Vegas Association of Realtors Board. So let's just look at a lot of the year to date, and then we can kind of back into June a little bit. So for the first 6 months of the year, we've had about almost 16%, 15.5% more listings coming onto the market than we did the previous year. The pending sales are about flat. The closed sales are down about 8.2%. And days on market are up. You can see here it shows 36%, but it's really went from 33 days to 45 days. Prices, if you look at the average or the median price, we're up right around that 5.5%, 6% is kind of the ballpark over the first year to date. This is interesting here. Percentage of list price received, we are still at 98.4%. It's interesting because the news is touting some negativity in the Las Vegas housing market, which they're the only ones that are seeing that because the negative news sells. But we do try to get some investors coming over here thinking that they're just going to steal homes and offer 10 or 20% below the list price, and it's just not going to happen here in Las Vegas. I mean, we still have a super strong real estate market. Month supply of inventory. You can see, yes, that our inventory has went up 43%. The problem is that's the only number that the news touts is that inventory has went up 43%. And it is true, it has. But the more in-depth way that you need to analyze that is we are only now at 3.3 months of inventory. The proper amount of inventory that we'd like to see is somewhere around 5 to 6 months. So back here in 2018, through the first 6 months of the year, it was just desolate. We had no inventory on the market. So it's critical now that we're starting to add this inventory because now sellers are willing to sell because they actually can buy a home without getting 10 offers on every single house. And buyers now are able to start buying homes without, again, competing with 5 or 10 offers on every house. So yes, our inventory has went up a little bit. But again, it's for the positive, not for the negative. We can't continue to function in a market that is getting 5 to 10 offers on every house. So now we're starting to get more normalized where houses are sitting on the market for around a month, and we'll get into some of that data. But one of the things we're really seeing right now is if you look at this June data, you're starting to see like pending sales is all of a sudden picking up almost 10% over the previous year. So what's going on? Really the big picture to that here is interest rates. The market started really slowing down at the end of last year because interest rates just started climbing and climbing and climbing. But then since the beginning of this year, they just started falling and falling. And here we are now in July of 2019, and this is the lowest interest rates we've had in 3 years. So of course, this has sparked a buyer frenzy for these home buyers to come back out, get into the market, and just really start going again. So here's just another quick picture of the inventory. Just shows a nice graph and the median price that's happening in Las Vegas. So this is back June of 2018, and it just shows each month building into June of 2019. So this is that inventory that we've talked about adding, which is a good thing. So people try to say, oh, we have 12,000 homes on the market, that's too many. Unless you know how many homes we sell on average every month and you do the division, it doesn't matter. Every market's different. It's not about how many homes are on the market, it's about how many homes are selling each month and what is the absorption rate, the number of months of inventory that we have. Is it a healthy market? So we can see that the median price is continuing to go up. We did stabilize here a little bit right there, and now we're starting to trend up again. Days on market. Again, this shows a full year, so you can kind of see the trend of what's happened here. Back here, last year, June of 2018, and an amazing 75% of homes were selling in the first 30 days. And honestly, if this was 0 to 14 days, I think the number would be about the same because so many homes were getting multiple offers so quickly. So now the pace is starting to slow down a little bit. And then in the first 30 days, we're selling about 58% of homes. And if you look at both of these numbers between 0 and 60 days, pretty much almost 80% of homes are selling. So still a really healthy market overall. So these are the loans by zip code. I know, I'm sorry, this is a little bit smaller. I couldn't make it much bigger, but this, you can kind of zoom in a little bit on the video. But this is, what's important here is this loan percentage. So it shows the zip code, shows the quantity of sales that were done in that zip code, and then it shows what percentage were mortgages. So if you look through here, all these lines, you'll pretty much see that about 35% of people are paying cash on average. That's a really healthy market. And it's not, the naysayers would say, well, it's only at the low price points. But, if we look over here, this zip code here, 89135, the average price is $778,000 with 804 sales, and 38% of them paid cash. And down here, $591,000. So this has nothing to do with investors coming in buying cheap homes. In fact, a lot of investors are leaving because we are getting people with the primary residences. If you were to go back and look at this same graph, back in 2006, 7, and 8, these would be in the mid 90s, that 95% of people were not only doing loans, but they were doing 100% financing. Just a totally different market today. Okay, so actual year over year, this is by the FHFA. You can see all the sources down here where these graphs are coming from. So it shows that Nevada as a whole went up just a little over 10%. And that was for the previous 12 months. And you can see a lot of other states here of what's happening. And so now CoreLogic, this is what they've been forecasting for the next 12 months of appreciation. So the reason I show you this graph and why these numbers are different is back here in May, they actually had forecasted 3.6% growth over the next 12 months for home prices. And I should say that a lot of this data that I'm talking about right now is as a nation. It's not about Las Vegas. But obviously the health of the nation, the economy, interest rates, all that stuff is on a big national level, even though markets are different, local markets, but they tend to follow the national trends unless there's something going on in that particular market, like an energy issue, oil, something like that, where a lot of people are losing jobs. Okay, so here for CoreLogic was forecasting a 3.6%. Then in June they stepped that up, saying, "Oh no, we way underestimated this year. The next 12 months they're going to appreciate at 4.7." And now in July they're increasing this to 5.6%. And why? Because of a healthy market or a healthy economy, a healthy real estate market, back to that interest rates dropping, and the unemployment rate is so low that obviously when people, right now, it's one of the fastest times that wages are growing in history. So as people make more money, they want to upgrade and go to a better house. It's just a natural cycle. Okay, so this one, this is the home price expectation survey, this graph here. And this is hundreds of knowledgeable analysts, real estate analysts and economists. And what they've done is they've pulled them all together and they've surveyed them of what will happen with housing prices between now and 2023. So that way you can get a better idea, because most people don't buy and sell a house in a year or 18 months. They plan on holding it 4, 5, 6 years. So they wanted to get a little bit further out for everybody to understand. So if we just look at all the projections, they're anticipating that home values across the nation will go up around 17% as a whole. Now, if you just look at the bulls, they feel it'll go up almost 28%. But if you look at the most negative people only in the survey, they anticipate that housing prices will only go up 6.7% by then. So the good news here is, not even the most negative people in the survey are feeling that home values will go down in the nation. So that's great news. And this kind of breaks it down. If you were to go back to this all projections, going up 17%, they kind of broke it down now by year of what they think is going to happen as an average. So we'll see that people are talking about a coming recession. Now, the thing I want to mention again is a recession does not mean a housing crisis. A recession is completely separate. It means that the economy as a whole slows down and has negative growth. So it doesn't mean that it's a housing crisis. It doesn't always have to be housing led like it was in 2008. So they're saying that yes, the appreciation will slow down a little bit and then we'll start picking back up. And then this also breaks it down a little bit further. And again, this is all on a national level of where they feel that home prices, where these reputable sources are forecasting, and some only go out 2 years, 2019 and 2020, and then others actually go out a little bit further. But it is really hard to honestly tell past 2 years, so that's why they do that. So I know that you hear a lot of negativity in the news about the adjusting real estate markets, but the reality of it is it's super healthy. We always want to focus on, how's the economy doing as a whole, but most importantly, 80% of people don't have a substantial amount of money invested in the stock market. But what they do base their house off housing, whether they're upgrading, downgrading, whatever they're doing, they base that off their job. Do they have a steady form of income? Unemployment is at the lowest it's been in, I think it's 50 years now. It's super low. So of course people feel wealthy as they're getting raises, their jobs are really stable, and they're optimistic about the future. So they're putting that money to work for them, and they're going out and they're buying their dream homes that they love and they want to raise their families in and live the lifestyle that they want to be. So I hope that this was helpful for you. And if you have any questions, please feel free to reach out. We'd love to hear your feedback.